from Forex Trading Unlocked, and we are here today on February 27th, 2020 with a daily Forex market and live trading breakdown for you. We have a lot to talk about today with what's shaping up in the currency markets. We just want to show you our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. All right, now we're going to go to our live action screen here at www.forex-trading-unlocked.com. Where we have our workstation page already pulled up, and we're going to scoot down here. We do have durable good numbers. Obviously Thursday it's initial jobless claims as well. Then there's some commodity numbers, but we do have pending home sales, which is also a key number to be looking at as well for the interest rates and the currencies as well. The stock market, as we know, is in a free fall right now. CPI is also coming out for the yen, so the US dollar yen, and also retail sales for Japan also. So there's also some numbers there that could shake up the Middle East besides the coronavirus. So, speaking of coronavirus, we have a very interesting divergence going on in the currency cross rates this week. We have the U.S. dollar showing certainly nothing but strength versus a lot of currencies, and now it's also exhibiting weakness. So we have a little bit of an influx in the dollar index, and we will cover that as we get through these cross rates. But we're starting out with the U.S. dollar, Turkish lira of all currencies. Why are we starting out with this one? Well, we've been talking about this being the major bull of all the lesser crosses right now, and every single day it pounds new highs. Now, this one isn't exploding, but once again, as we're talking right now here, we're just over 15 minutes in front of the U.S. Equity market openings, and the Turkish lira is falling like a rock against the U.S. dollar, not getting any type of a bounce. Remember, we've been looking at this market saying that we're looking for dips to buy. This market is a bull, and one of the main reasons that we're looking at it is the fundamentals because of the coronavirus. Now we have, obviously, the equity markets have been getting slapped the past few days, and especially now we have, I think, Goldman Sachs and a couple other firms that are now committed to the fact that earnings are going to be very, very weak for 2020 in the future. So, and earnings, we know, drive markets. So with that being said, I think we have a very good chance of seeing this break or this correction now in the U.S. equity markets continue, especially if the numbers with the coronavirus don't start to subside. So that is at the forefront. So with that being said, we know that Iran has a big deal in Pakistan and throughout the Middle East that we don't know exactly what's going on right now. We just know that the numbers are increasing, and how severe the spreading of it in the Middle East is, we have no clue. So, but it is definitely disrupting markets. Turkey lies right in the middle. They're right there along the Silk Road, right in the heart of it. So, and I think that because of the slowing down, especially because they're a big port area too, and a hub for trade. So if trade comes to a crashing halt, what does that do for Turkey? It definitely doesn't bode well for them. So right now, I think this strength is something we are going to see. Like, we could be seeing. This market's been in a very big rally for the past, obviously, 6 months. The funny thing is that this may be just the beginning of the leg higher in this trend. So we know that sometimes currencies, they get a major trend. I think we're about to see how far we can stretch this one. This bullish trend has the potential to continue going on for the next 6 months. Now, does that mean it's going to radically explode to the upside? By no means, absolutely not. However, the likelihood of it being at this level or higher for the next 6 months is very, very good. So you can see our directional pivot here is 6.066 basically for the U.S. dollar, Turkish lira. Anything above that, we're bullish. Anything below that, we're just neutral. Still looking for a break to buy. And right now, I think that you're going to be very hard-pressed to find anything to the downside. So maybe some range guys, because they don't really seem to be blasting through these highs. So right now, this might be the extreme for the day. I don't know. We'll see. The dollar's getting hit versus a lot of other currencies. Right now, obviously, the dollar's not getting hit here. So this is a divergence we have when we have a counter trend going on as far as this fundamental and technical play that's going on with the US dollar. So we'll be definitely watching this one, and for you aggressive bulls, hang on for the ride, because I'm telling you what, it's gonna swing. We've already seen a lot of volatility just on Monday alone, let alone or excuse me, Tuesday, even Monday. So, I mean, we just keep making new highs, but it definitely, when it slides off hard. So this currency is not for the faint of heart. If you're not capitalized and are very astute and used to trading the currency markets, I highly suggest you stay away from this one. So now we're going to go look at the US dollar and Mexican peso. Here's another lesser currency cross rate. That, look at this. This is unreal. This market has been trending lower for months, and literally within just this week alone, here we are, Thursday, Wednesday, Tuesday, Monday. Well, actually started last Thursday. So within the past week, this market has exploded from the bottoms here at below 1860 pesos to 19. It's almost it's almost a full peso, a full dollar higher, or peso higher rather, excuse me. So this is a very explosive bullish market right now, and I think that this is where the dollar had been very bearish. It has not. That whole sentiment, whatever the fundamental that was driving it down versus the Mexican peso, I think has evaporated, because this doesn't look like just a corrective move higher. As you can see, like this rally here, or if we come back here, these are corrective moves higher. This one here, this is an explosive turn of events. There's a lot of volatility here. I mean, just look at the ranges on these days too, just to perpetuate this rally and the momentum that's going on. And here we are going right into the U.S. stock market opening, and this market is still just driving higher. So the U.S. dollar, definitely, when it comes to another currency like this, just like the Turkish lira, I think you're going to be very leery if you're a bear. So just to be leery, just to be mindful of that. And if you're a bull, I think you got to look for some extreme pullbacks to buy into, or you have to be ready to take some heat, because we are going to see probably some major swings. This market overall is in a long-term bear market, but short-term it is definitely confirmed higher move highs with making higher move lows. So that's the question right now, is will it maintain that posture? And if it does, we know that is a bull market. So be very cautious if you're trying to sell into this, that's for sure. I think if you're trying to sell into it, you're going to really put yourself under a lot of heat today yet still. So be mindful of that. And now we will see what's going on in that northern part of the trading zone in the Americas, to see how that currency is going. So this one took a nice turn of events. You can see that it took out this last higher move high. So that confirms this as a swing low, being a higher move low, and now we are blasting into higher move highs right now. So the question is, how high can this go? I guess the question is how low can the U.S. stock market go? We'll see how the morning trade happens. Remember, the first half an hour to an hour, a lot of times it's just a reactionary trade. So if the stock market's lower, it doesn't mean it's just going to be lower all day. We might see a big rally today. You get a lot of pivot points on Thursday. However, the one thing that we do have is we have a confirmed divergence in currencies, with dollar strength in certain currencies and dollar weakness in other currencies. And I think that these trends right now, at least into the mid-morning trade of the U.S. session, are going to continue to pressure these higher move highs and lower move lows and these extremes. After we have the numbers at 9 o'clock, then you may start to see us a subsiding of the momentum, and perhaps a reversal of fortune, of direction and what have you. So we'll see how that shapes up. But right now, I'm telling you, you're in front of a freight train, because the currencies are moving. Momentum is going in one direction. It's just a matter of which cross you're looking at. As you can see, we're going to use this last higher move high at $1.3329 as our base for support. However, long term, only if we fall below $1.32 even do we see this market being even remotely bearish. Excuse me, this market is a bull, so be very careful selling into it. Now, how high does it have for potential? Well, that's the tricky question. So we have had a lot of upside momentum over the past week, maintaining this into fresh new highs. Now, we just breached it yesterday and have exploded through it overnight into this early morning, so it's not a full 24 hours since we've even gotten through that peak. So that's the question, is dollar momentum on this side. And I think that we do have, like I said, a true divergence of currencies. And before this market, this bull starts to give up, I think we're going to have to see that happen in our major currencies, which we are getting to now. Now we're going to cross the pond, and we're going to look at the British pound, US dollar. Now this one, talk about a currency that cannot make up its mind what it wants to do. Now it has been making lower move lows and lower move highs, which definitely confirms it's a bearish market, but it's really a neutral to bearish market. It's not truly trending lower. It's just just poking new lows, and then it bounces back up. Now the key is that where we have this pivot here, this is our last major swing high at $1.3068. If we get above here, that definitely confirms a neutral to bullish posture. However, we have this low here at $1.2847, which we are just hovering above. If we take that out, that confirms obviously new lows, and after we would have made a lower move high just a few sessions ago, confirming definitely bearish sentiment. So then we maintain the sell rally forecast. So your range traders, the bears, I think you have a really good chance right now, especially if we take out that low today. But the question is, since we have, like I said, we have a turn, we have a divergence as far as dollar strength. So while Asian market, or excuse me, while the lesser crosses versus the dollar are gaining versus the dollar, not so with some of the other stronger currencies. Now the pound is one of the biggest weights in the dollar index. It's only slightly lower, and it was higher today. So I think you have to be very mindful of that. So if you're an aggressive bull, then I say you use this $1.2847 as your risk level, because if we fall below that, we don't know how far this is going to fall down. It could be like it's been, just creeping lower, or we can get a nice sell-off. You know, we have, if you go back to the trend, this is our base right here, this last swing low here. This is what's been supporting this sideways trade for the past 6 months, basically. So now, if we take out this low, well, then we're targeting $1.2755. Definitely to either find our support base or confirm that this market is slowly eroding versus the dollar. Versus not, and that, I mean, if you look at it on the year, how far is the pound down versus the dollar? I mean, it's taking almost 3 months, or excuse me, 2 months to get from where it closed out 1999 to get to where it is. And it's not that significant. You're looking at $1.32 quarter down to $1.2874 where it's at now. So it's not that big of a move, you know, considering the volatility we've had in the major currencies, especially like the euro, which we're going to get to now. So remember, if you're a range trader, I think you got a lot of opportunities still, buying into lows or selling into highs. As far as directional base, I think that you can try and buy into lows if you're an aggressive bull here. And especially if we take out this high from 2 days ago, well, then that would just confirm our neutral to higher bias. And then you have probably a good chance at hanging on to a trade for maybe even a few extra sessions for a little extra testing of resistance or challenging of resistance to the upside. But right now it doesn't seem like that is going to be the case. Let's see how the numbers pan out for the U.S. at 9 o'clock, and then with whether or not we turn around and get back to positive levels. If this market does maintain its lows from the day today so far and goes back and settles positive on the day, that definitely is a nice indication that the pound U.S. dollar will remain in this neutral trade. So your range traders, and especially if you are, you know, aggressive bulls against this like support here or aggressive bears against resistance here, I think you're going to have a good opportunity to play into this for a while. I mean, we thought this range trade stuff was going to end after Brexit started on January 31st, and here we are a month later. No, it's still doing the same thing. Not quite as sideways, a little bit more directionally to the downside, but the trend is your friend, so that's what we do. If we're looking for lower move lows and lower move highs, so selling to the highs, we're looking for a sell rally situation or a buying dip situation, and we'll take it from there as time goes on. So now we're going to look at some interesting moves going on. Talk about a signal that has finally really shown how aggressive it wanted to be. So we've had this bearish engulfing line sell signal that was triggered last week, and it had a little trouble at the beginning of this week, especially with yesterday. It looked like it was trying to bottom out, and we had just touched into our target zone. Now this, where we are right now, from the low of yesterday to where we currently are now, this was our buy zone. We totally hit it now. So now the question is this gonna become a rock solid support base, or is it going to continue lower? Well, right now, the way this market's going into the opening for the U.S., this market just looks like it wants to continue lower. Now remember, the Swiss has been a bull versus a lot of markets for a very long time, so you got to be careful when it comes to this currency as far as for strength. In fact, we can show you real quick. We're going to go to our website, our www.forex-trading-unlocked.com website, and then we're going to pull up a little resource here. So we're going to go to our markets page, and then we're going to click on, all right, let's get this to, actually screw that, that's not going to, it's going to take too long to load, sorry. We'll just use the charts that are already set up. These charts are live, the other ones just to load it up. It's not obviously running slow. So anyhow, we are on the offer. We've gotten into our target zone. So here's our major pivot, 98.48. If we were to turn around, bounce, and rally, that definitely confirms a bull in the US dollar and then run for back up towards this 99, even the 99.5 area. However, I don't think that that's the case. I think that right now the Swiss bulls are back, and that if anything, we're going to have a sell rally forecast and a neutral to lower trading going on. Now, right now we have made a higher move high, and we are still in a higher move low scenario. We have to take out 96.27 to confirm that we are bearish the US dollar Swiss. So right now we are the long-term, the intermediate trend was obviously bullish in the short-term trend, but the intermediate trend is now neutralized, and as far as the short-term trend, obviously it's bearish. So we've been making lower move lows with lower move highs on the intraday basis, pressing this daily, weekly slide down to new move lows. So use caution trying to buy into this move. The sell signal here has completed its target though, and so it's kind of ironic that we're coming right into the U.S. Open, like right at the bottom, like this hit it. We just traded just barely through it by a few pips. So anyone that's been riding the U.S. dollar Swiss trade, which by the way, we are going to show you this real quick. Oops. And there we go. So you can see, let's get this New Zealand dollar chart up like this. Okay, so if you see this chart here, we have the euro. You can see how aggressive this rally has been today on the daily chart. Obviously, with the moving average, it's starting to round out now, so obviously our lagging indicators are liking this turn of events in the trend. So could this be the end of the rally today? We could be running out of gas right here, and then you know, start to go back to a slide. Remember, this market was in a free fall, so this trend has been lower, and now here you can see on the MetaTrader floor platform how this rally is just exploding today and riding the highs, and we also have the Swiss riding the lows. So just like we had those the sell signal, we had a buy signal in the euro, which we're going to cover that one, and you can see now that we had entered, you know, we've been riding this for a while, and we've lowered down the stops, so you never want to let a winner turn into a loser. So no matter what happens today, we know that these trades are going to be fine. So we also have another couple to look at too. We have some binary options trades to look at. We had, like, remember we had the Canada, so our options here, we can see that the underlying indicative is at $1.3363. Our options expire on Friday. They have it 1 day left. You can see that when we got into them, it was 224, so that was 3 days ago. So we have all three long positions. The only one that we turned out, the funny thing is our average price is exactly what I mean, we can't even get out of this thing anymore. We just have to let it expire worthless and hope for a bounce. So we haven't even gotten to that one yet. So we look at the US dollar Canada so far. We can see that that trade's positive. We have the euro US dollar at 109.25 is the strike price. So we are going to go now to the euro US dollar, because we know that our Swiss trade has already hit its target. So now we are lowering the stops just because of today's trade. We're actually going to try and ride this one out a little bit. If it doesn't, no matter what though, today we are lowering it all the way down towards close to where the market will be, because we've already hit our target zone. We don't want the market to snap back on us. So we're going to see how things shape up with the 9 o'clock numbers and let it ride. You can see our bullish engulfing line buy signal. This also today. Now the euro was coming just shy of its target zone yesterday, while the Swiss had already taken it out. Now the Swiss has gotten all the way to the bottom of its target zone, and the euro has done the same as well. Actually, it came to within, what is the high? The high is 109.78. Yeah, it had about another 5 pips to go. So we're just shy of the ultimate extreme for its buy signal target. So that's something to remember. Like, this is a corrective move so far in a downtrend. So is this the beginning of a bull, and is this market going to continue higher for the next couple months? It may, absolutely. But that's not what this trading signal was about. This signal has been completed. So if you've been riding this from the beginning, like we have, you see how we rode our stops up. Now they're definitely, no matter what, we're making money on them. And by the end of today, we're going to raise them up even more to lock in a permanent target profit as well, because we'll be able to lock in the lower extreme. So that's how you work the trade, and then that's the way you make your money. And then if you had a bigger position and had a couple of extra on or something like that, to ride to see if this trend continues, because sometimes this is the beginning of a new trend. You never know. So, but then you have to manage that and figure out where you're in, as far as, you know, if you're willing to take heat and stuff like that with them, and that's a whole nother trade. We're not telling you to do that, or trying to tell you. We don't tell you what to do anything anyhow to begin with. But if we're just trying to tell you, if you're trying to do that, you're probably going to start to get yourself chopped up. So we do try to protect you from doing stupid things. That's for sure. That's why we're here. So the bull has successfully hit its target, and we are here on its highs. The day is just beginning in the U.S. For me, actually, after this video, it's pretty much over, because now I just have to wait until the close and see how things manifest over the course of the day, and then we'll write out our trades. So once again, you know that we are riding this long here in the Euro US dollar. We're riding the short in the US dollar Swiss. We're also riding that bull in the US dollar Canada. So now we have, you can see, trades where there is US dollar strength. So we bought the dollar versus the Canada, and we have sold the dollar versus the euro, and also versus the Swiss. So that's where like I told you, we have a divergence in currencies, which has definitely been confirmed over the past few sessions to a week, setting up these counter trend moves. Remember, right now, everything that we are watching right now in all these markets, these are counter trend moves. So are they complete changes in trend? We don't know. But what we do know is that all the signals that did occur, and they've all pretty much rounded out around the same time with the dollar. So, or they've kept on continuing. So that's the other thing you have to look at. So, and we'll get to the Asian currencies in a moment. So we have this buy signal that is completed, and we are waiting to see how it finishes out today, and then we'll see if we can ride it even higher. But we will lock in our target. We'll have made our nice profit. We will have done what we were supposed to do, maintaining our discipline, and then we also have the opportunity to get a little extra gravy on top because of this momentum, especially if these 9 o'clock numbers smash the U.S. stock market. I mean, right now, NASDAQ futures are looking to be, what is it, 1,900 points lower. I think the Dow is supposed to be down right now. We're 15 minutes in front of the opening, something like that. So, there's not much to go on with that. There's no support there, I think. So right now you can see, we're just buffering underneath these this resistance. So we're going to now jump to our other trade in Asia. Now, Asia, we know, is definitely the heart of this whole coronavirus thing. We know that the fundamentals may be overdone in the currencies and in certain currency cross rates. That's evident by what's been going on this week. U.S. equity markets, we're not going to even try and go there, especially because now of all the downgrades and the confirmation that at least the big investment advisors and Wall Street itself is accepting the fact that the coronavirus has got to impact earnings somewhat. So now they're totally downgrading them. Now maybe it's not even enough, or maybe it's an extreme, but no matter what, we all know that earnings support the market, and that's why the dollar is in play right now. So the U.S. dollar yen, this has been a bull no matter what's been happening to the U.S. dollar for a while. Now, ironically, the U.S. dollar is, like we said, very strong against lesser currency crosses. Not so against this one. This is one where we had made a higher move high, and now we're still in the verge of making a higher move low. However, if we fail here to $109.51 here, this is what's keeping us the support for this uptrend. Any failure from here definitely confirms the bearishness of this market, and at the very least would be in a sell rally forecast at that point. We wouldn't be looking for we would be looking to sell into strength and to buy into weakness at that point. So right now, range traders, I think, you've been having a rough time the past week and a half, that's for sure. And I think even right now it's going to get rough unless this support holds. Then you aggressive bulls and range traders, you got a shot at having some good opportunity, I think. But if you're an aggressive bear and you're still holding this one, if we touch, like I said, if we fail at $109 here, this is a big sell signal that we have peaked, and now we are looking to set a new trend, because this market has been a bull for a while. We've been bullish, saying that this is going to, we still have a target of 113 to hit. Now, we did have a target of 112 to 112 half. We fell right in the middle of it, piercing this a week ago. We've come back in a big way. Now, here's the other thing you got to remember. Markets go out like they come in. So if you split this rally, and this is where I'm very cautious about trying to be very bearish here. If you split this move in half here, see how we got this blue line? Let me make it a little bit thicker here. This is, if markets go out like they come in, you can see how we've pretty much done that. So we've equalized, and we're right here on some pretty key. This used to be resistance, now it has become support, you know. So that's the question is if this market is truly bearish, it's going to take out this 109 and continue to hammer support. But right now, it looks like we're starting to find a base here. So I would use caution here, and I'm not just saying that because we have a 111.75 strike price binary out there, but that's all the way up here, you know. So is the market going to rally today and tomorrow all the way back up there? Well, that would be extreme. That would have to have a move like this happen here over that 2 days. We don't see that at all. We see that option expiring worthless. So, it was just a bad play. But we also had thought that we had found the right correction, you know. So, and it wasn't the case. Momentum has fallen apart. So the coronavirus is driving this one here. Now we heard that Japan is starting to close schools and plan on closing them for a while. This is another big thing. It's starting to show how they're closing up, you know, society, if you will. I mean, it's, you know, when you start putting the kids in lockdown and stuff like that, it's trying to keep mobility within their own country to a minimal. But it's what you have to do. It's the right thing to do to contain things. But we are coming into the spring, so it's not like we have to worry about this going on for the next, like, 8 months. We do have to worry about it for another few months, but we should start to see over the next few weeks I guess, a slowing of the growth of the virus. So remember, our key pivot here is at 109.51. Now let's look at the Australian dollar, US dollar here. Okay, here we have a nice little rally going on today. So for you aggressive bulls, this would be where you'd want to use your pivot here at 65.40. You're just off the lows. Right now you're showing strength, and you know, irony of it all, of one currency that could use a correction, it would be the Australian dollar, US dollar. Now, is this market bullish? No, not really by any means. If we do get a rally, we definitely think it's a rally to sell. But it would be nice to see a good correction in the Australian dollar, US dollar. So this would come because of dollar weakness, which seems to be showing its ways in certain obviously quadrants. Obviously the dollar is strong in North America, however the dollar is weak in Japan. So if this market truly is starting to fall apart in Asia with dollar strength, that means, or dollar weakness starting to come into play, then this would be a good area to see this market bottom and then start to see a bounce. Only a breach of 67.5 up here, this last lower move high, would give us even remotely a neutral to bullish forecast for this currency. But right now we are looking for, if you're an aggressive bull, using this 65.40 as your risk. Anything below here, you're on the wrong side. If you're long, you're wrong. So, and if you're an aggressive bear right now, you could be looking to penetrate this support and take this out. But I would be very cautious because we have strength here, we have dollar weakness, we have divergence in currencies going on with the dollar. So I would be very cautious with this Australian dollar, US dollar trade, especially with the US dollar yen on its butt right now. So we're going to look at the New Zealand dollar, US dollar, which is not quite in the fundamental negative zone like Australia is, because they don't have the wildfires. They have the coronavirus to contend with, but they don't have quite of the other things to deal with. All right, so where is our pivot here? Our last swing lower move high here at 64.91 in this area is our bullish pivot. If we breach this and get above this, that returns this major bull trend that this market had been in. But as you can see, this market has already corrected all the way back to where it was in October practically. We're just right here. So right now, if we are going to find support, and this, it would be a kind of a good area right in this 63 to 62 half area, somewhere around here where it's at, maybe a little bit lower or a little bit higher. But aggressive bulls and range traders, I would key off of today's low right here around 62.79. Looking for a continuation of a corrective move up higher towards the 64-cent level. 64.91 is a really big long shot to try and get that high up against the dollar, but this market is due for a nice little swing high. We do have a gap to fill all the way up here, but I don't think seeing 66 cents anytime soon is remotely on our radar. Now it's kind of funny, remember how we talked about markets go out like they go in? Ironically, the coronavirus did that for this trade. Look at this. We were here, and here was our rally, and it took about 2 months, and now here was our break, 2 months. So we're actually, when you look at it, in the course of 4 months, we're only slightly lower in the New Zealand dollar, US dollar, and that is in the wake of the beginning stages of the coronavirus impact. Now remember, New Zealand doesn't have the issues that Australia does to the extremes, because they don't have the wildfires to contend with, you know, still in the aftermath. So they have a little bit more going for them as far as a country and as far as a dollar of their currency rather is concerned. Now look at this, what we have going on today. We have a potential bullish engulfing line buy signal going on here. Now it has not occurred yet. This market would have to close above the open of yesterday, which was 63.17. So as long as the market stays above 63.17, then that would be confirm a bullish engulfing line buy signal, which is a short-term buy signal, which would then we would have a target that we'll figure out for you later. But we're not even going to get into that right now, because you never want to try and predict a signal before it happens, because then you're gonna lose money. Majority of the time, you're going to chop yourself up, you're going to be frustrated, and the only thing you can be frustrated about is not the market, but your own stupidity for doing the wrong thing, because that is dumb. You don't wait, you don't try and, like I said, forecast a signal to happen ahead of time. You wait until it's confirmed. That is what makes it a signal. And then once that does happen, then you jump on it. So this afternoon, we'll be watching this New Zealand dollar, US dollar, a positive close, like I said, above 63.17. That is our number. That will confirm the signal, and then we'll figure out where the target is. So you have to come and watch our next video. And if you want to do that, and remember how when it's going to happen, you just subscribe to our YouTube channel here at YouTube/Forex Trading Unlocked, and then you'll get an email when we come out with our next video and we're streaming live. So you can get the whole deal on how to work this signal. So we'll be looking at this for futures trades, or options trades, and also some binary options trades rather, and also obviously the Forex cash trade. So, and we will be looking to obviously become bulls for the short term for a counter trend correction. Remember, we are not looking to call a bottom or a change in trend. We are only looking to look for a potential counter trend move setup, which has to be confirmed later. So we have covered the New Zealand dollar, US dollar. We covered the Australian and the yen. Let's go back to our euro US dollar real quick and see how this one is shaping up once again. Wow, it just continues to go higher. That is just nuts. So once again, we have our euro US dollar 109.25 strike price to be greater than. Remember, when you are buying the binary options, you're looking for the market to be greater than the strike price. So this euro US dollar is at 109.25 is our strike price. Right now, the market's trading at 109.84. So that's why if we get out right now, obviously it's a positive market. The value of that contract is $83, $82 for if we were to get out of it right now. If we ride it through tomorrow and the market remains above that strike price of 109.25 and does not retrace its way back, then we will obviously get the full value of the option contract, which is $100. and have a nice profit on the trade because we were in at $25, 25 and a quarter. So as you can see, right now the profit on that for on a one contract basis is 57 quarter. We have our US dollar Canada trade also that we're looking at too. US dollar Canada. Now this is one that we may get out of later on today because our strike price for this for the US dollar Canada is 133.75. So the market is hovering just below that right now. So if we don't get a continuation of this rally here or a bigger extension today, then we have the potential where we're not going to make money on this profit. You can see on this trade, you can see right now we are up a nice amount of money. We paid 15 for it. We're up 22 in it, so position value is 37. $36. So right now it's a nice return on what we put into this trade because our risk was only what we paid on these options. You never risk more than what you pay when you're buying these strikes. So if we were wrong, like I said, which we could be with this Canadian trade because it settles tomorrow, in which case then we lose that money. So right now that trade is positive. So we're going to see how it settles or handles the numbers at 9 o'clock and then settles today, and we may get out of it before the close. So you have to look at our next video to see how we're working that trade. And remember, we don't ask anyone to try and follow us, especially if you're not in it. Now is definitely not the time to be trying to do what we have on whatsoever, because we already have our risk put in and we already have our stops in. As you see, we raised our stops on the MetaTrader platform as well as we did on the regular WebTrader platform. As you can see, we did that too here, so we have that all in place, which is good. That means that our discipline is done for the day. Our trades are adjusted for the day, and now we just have to wait to see what the market will bring us, right? So we have that going on. We looked at all those different trades, and we have the US dollar Canada trade that we will continue to look at and see whether we get out of that later. We have the US dollar yen trade, which we know has collapsed on us. But that's obviously they're not all winners, right? So we're not just showing you winners, we're showing you everything that's on here. So these are the losers and the winners. Right now the winners are doing well today so far, shaping up. Never know how it's going to turn out. And remember, we do have a potential trade shaping up in the New Zealand dollar, US dollar. So we will see how that goes. And see whether we have confirmation. So we're looking for a new trade setup. Remember, as we're winding down this video, if you want to, excuse me, I got a little cold. Hopefully it's not the corona. No, I think I'm all right. The US dollar Canada is winding down that position. The US dollar yen trade is winding down that position. Obviously, we're not going to see anything most likely out of that, but you never know. That's why we're letting it go now. It's worthless. You can't get out of it. So, but it is an option, so we do have the time. And then we have the Euro US dollar long that we are working. We've raised our stop. We've already hit our target zones, and we know that after today, obviously, no matter what, we can get out at either a profit, or we have the ability to see if we can get a little extra gravy while locking in our targets potential that we already were looking for. And the same is for the US dollar Swiss trade. So now remember, just because we're looking to get out of these trades, that does not mean that we're saying that these trends are going to stop. We're not trying to pick a top. We never try to pick a top or a bottom. Remember that. All we're doing is proper trade management. We're following the rules. We're getting out where we're supposed to. Just like we got in and had our risk on, we raised our risk, and now we've hit our targets, and now we get out, and that's how we do things. Or we manage the last, since we have such a lead on these trades, we have the ability to lock in our targets and still have the ability to increase our profitability on these trades. So it's basically, now we have the potential to have a free trade going on for a couple of these markets. And so we will see how that works. Remember, if you want to see how these trades end and how they are going to shape up over the next 24, actually, well, we have a little more than 24 hours before the markets are closed. So right now we are on a Thursday morning, and the equity markets just opened just under 20 minutes ago and are just starting to rear their heads, and we'll see how things go. Crude oil also is something to watch, folks. The crude oil market has been getting slammed. For some reason, it's not dropping the price of gas in Chicagoland, but it does around the rest of the country. So for all the rest of you in the U.S., you might see a nice little downtick at the pumps going into the weekend. So keep on following us here and subscribe to our YouTube channel at YouTube/Forex Trading Unlocked. And then you will be able to follow us and find out how these trading signals are going to come to fruition or be completed, as well as the new one that is on deck to see if it does occur. So with that being said, check us out every day at www.forex-trading-unlocked.com, and we will see you soon. Thanks.